Assalamualaikum warahmatullahi wabarakatuh. My name is Nulaila Humaira binti Rusli and I am from BA 1145D. Today our group will be presenting the past year question for Chapter 6, Preferred Stocks. There will be two calculations involved, which is the participating preferred stocks and the cumulative preferred stocks. I will be presenting the cumulative preferred stocks first, with the first question is from March 2017. Firstly, let's read the question together. P. Sonic Berhad has 7,500 units of 8% cumulative preferred shares and 10,000 units of common shares. As at 31st December 2010, the firm had a total arrears on its dividend payment amounting to 50,000. Other information related to the firm's yearly earnings are as follows. In the year 2011, the earning after tax is at 250,000 and the retention ratio is at 50%. In the year 2012, the earning after tax is 270,000 and the retention ratio is at 50%. In the year 2013, the earning after tax is at 300,000 and the retention ratio is at 70%. In the year 2014, the earning after tax is at 150,000 and the retention ratio is at 70%. In the year 2015, the earning after tax is at 400,000 and the retention ratio is at 80%. In the year 2016, the earning after tax is at 600,000 and the retention ratio is at 80%. Considering all this information, compute the amount of dividend for the 7,500 units of preferred shares and amount of annual dividend paid to both preferred shareholders and common shareholders. Let's do question 1 first. The first thing to do is to extract all information on the paragraph. From the paragraph, we know that the number of stocks for preferred shares is 7,500. Dividend rate for preferred shares is at 8%. Number of stocks for common shares is at 10,000. Arrears is amounted for 50,000. So, for question 1, to calculate the amount of dividend for the 7,500 unit of preferred shares, you will need to use the formula of preferred shares dividend equal to dividend rate multiplied by par value multiplied by number of stocks for preferred shares. Therefore, preferred shares dividend equal to 8% multiplied by 100 and multiplied by 7,500. Here, you need to remember that the par value for preferred shares is automatically 100 if the question does not state the par value. When you calculate this calculation, you will get 60,000 for the amount of dividend for the 7,500 units of preferred shares. And we are finished for question B1. Thank you.
Assalamualaikum, my name is Nurin Jazlina and I'm going to explain question March 2017, question B2. If you look at the question, they were given the earning after tax and retention ratio in percentage. Firstly, what is retention ratio? The retention ratio is the proportion of earnings get back in the business as retained earnings. The retention ratio refers to the percentage of the net income that is retained to grow the business. Rather than being paid out as dividends, after dividends have been paid out, the amount of profit left over is known as retained earnings. Therefore, to calculate amount of dividend for retained earning, the formula is annual net income minus net change in retained earnings equal to dividend paid. Using the same perspective, now we are going to calculate the dividend. However, we need to find the amount of retained earning first. Step 1. Multiply earning after tax with retention ratio. So, from 2011 to 2016, multiply the percentage of retention ratio with the earning after tax. For 2011, 50% multiplied by 250,000 and you will get 125,000. For 2012, 50% multiplied by 270,000 and you will get 135,000. Then continue with the same step for other years. Second step is minus the amount of retention ratio with the amount of earning after tax. For 2011, 250,000 minus 125,000 equal to 125,000. For 2012, 270,000 minus 135,000 equal to 125,000. Then for the rest years, calculate with the same step. Step 3. Proceed to construct the table to get the amount of annual dividend paid to both preferred stockholders and common stockholders. There will be a table of 5 columns and 8 rows. Label the column tables with year, dividend, preferred shares dividend, arrears, and common stock dividend. For the row, first look at the year. We know that from the question, the year started at 2011. However, from the paragraph, we also know that there are arrears amounting 50,000 ringgit. This 50,000 ringgit arrears means that this is the amount owed to the preferred stockholders as a company fails to issue those payments as promised from the previous years. Then we need to add year 2010 to the table. There are no dividends, preferred share dividends or common stock dividend for 2010. For this year, we will only fill the amount of arrears totaling 50,000 ringgit. We will also need to fill out the dividend rows with the amount from the question from 2011 until 2016 with 125,000, 135,000, 90,000, 45,000, 80,000 and 120,000 respectively. For the year 2011, there should be fixed amount of 6,000 to be paid to the stockholders. However, there are errors from the previous years, so we need to add 60,000 with 50,000 and we will get 110,000. In 2011, the dividends amount that were given out was 125,000, which is more than 110,000, which means that it is enough to pay for the preferred stockholders' dividend and the arrears. Then there will be no arrears left and there are balance left for 50,000 ringgit, which will go to the common stockholders. Moving on to the year 2012, the fixed amount of dividend that needs to be paid is 60,000 ringgit and the company can pay 135,000 ringgit of dividend. Therefore, there will be a balance of 75,000 ringgit when we subtract 60,000 from 135,000. This 75,000 will also go to the common stockholders' dividend payment. Next, for the year 2013, the fixed amount of dividend that needs to be paid is still at 60,000 and the company can pay 19,000 ringgit Malaysia of dividends, which is more than what preferred stockholders needs. 90,000 minus 60,000, there will be 30,000 left that will go to the common stockholder dividend payment. For the year 2014, while the fixed amount is still 60,000, it is quite obvious that the amount of dividend that the company can pay cannot cover the fixed amount at only 45,000. The company will still pay 45,000 to the preferred stockholders and the remaining 50,000 will go to arrears row, where it will be carried forward in the next year. In this year, there are no amount left for common stockholders, so common stockholders will get nothing. For the year 2015, the fixed amount of 60,000 ringgit will need to be added with 50,000 ringgit of arrears, which will equal to 75,000. The company are able to pay 80,000 of dividend for that year. So we will subtract 75,000 with 80,000 and there will be balance 5,000 which will go to the common stockholders. For the last year of 2016, there will be still fixed amount of 60,000 and the company can pay dividend amounting of 120,000. So we will subtract 60,000 from 120,000 and you will get balance 60,000 which will go to the common stockholders. Therefore, the amount of annual dividend paid to the preferred stockholders is 110,000 at 60,000 at 60,000 and 45,000 at 75,000 at 60,000 is equal to 410,000. The amount of annual dividend paid to the common stockholders is 50,000 at 75,000 at 30,000 at 5,000 at 60,000 is equal to 185,000. We can see that the amount of preferred shares dividend paid to the stockholders is higher than the amount of common stock dividend paid to the common stockholders, which support the statement that preferred stockholders provide its shareholders with the right to be paid dividends in an amount equal to the generally specific rate of preferred dividends, plus an additional dividend based on a predetermined condition. Now we are finished with March 2017, question B1 and 2.
Assalamualaikum warahmatullahi wabarakatuh. My name is Anashimi and I am from BA 145D. Now we are going to answer the question for participating preferred stocks. I'm going to explain question June 2018. Question B1. Firstly, let's read the question together. Aurora Venture Berhad has just announced the dividend distribution of 600,000 ringgit to their shareholders. Both preferred stock shareholders and common shareholders will participate in any excess in dividend. Listed below is some financial information of Aurora Venture Berhad. Sales is 6 million ringgit, interest on bond is 1,200,000 ringgit, preferred shares 100 ringgit par at 5% is 2,500,000 ringgit, common shares 10 ringgit par is 2 million ringgit, dividend per share for common stock is 2 ringgit. Based on the given information, find the number of stocks outstanding for both classes of share and compute the dividend per share for preferred and common shares after the distribution of excess in dividend. Now, we need to extract all the information from the question. We know that there are dividend distribution of 600,000 and dividend rate is at 5%, and that both par value for preferred shares and common stock are both given in the question. Question 1 asks for the number of stocks outstanding for both share, which is preferred shares and common stock. So, what does it mean by number of stocks outstanding? A company shares outstanding or outstanding shares are the total number of shares issued and actively held by stockholders, both outside investors and corporate insiders. A company's number of shares outstanding is not static and may fluctuate widely over time. So, to find the number of stock outstanding for preferred shares, the formula is the amount of preferred shares divided by its par value. In this case, 2,500,000 ringgit will be divided by 100 ringgit, and we will get 25,000 units of preferred stocks. The same formula will be used for number of stock outstanding for common stock, which is the amount of common stock divided by its par value, which is 2 million ringgit divided by 10 ringgit. And we will get 200,000 units of common stock. Remember that the par value for preferred shares and common stock are 100 ringgit and 10 ringgit unless stated otherwise in the question. The total number of stocks outstanding for both stocks will be 225,000 units. We are finished with question B1.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nuradibah binti Ahmad Bahrudin and I am from BA 1145D. Today, I'm going to explain question June 2018, question B2. This question asks for the dividend per share for preferred and common shares after the distribution of excess in dividend. In simple words, this question asks for the dividend per share for these two shares. Step 1. Compute the stock dividend. For ordinary preferred stock dividend, the formula is dividend rate multiplied by par value and multiplied by number of stock for preferred shares. So, we put the numbers into the formula. 5% or 5 over 100 multiplied by 100 multiplied by 25,000 is equal to 125,000 ringgit. For ordinary common stock dividend, we will use the second formula, which is dividend in RM multiplied by number of stocks for common stock. This is because as the dividend for common stock is already given in the question, there will be no need to multiply by 100 anymore. So, RM2 multiplied by 200,000 ringgit equal to 400,000 ringgit. Moving on to step 2, we need to compute the amount available, which is total dividend declared minus total dividend paid. It is stated in the question that the total dividend distribution is at 600,000 ringgit. So, we just need to minus the total dividend paid, which is the sum of ordinary preferred shares dividend and ordinary common stock dividend. So, 125,000 ringgit at 400,000 ringgit equal to 525,000 ringgit. Then, 600,000 ringgit minus 525,000 ringgit equal to 75,000 ringgit. So, the amount available is 75,000 ringgit. Moving on to step 3, we need to compute the amount distributed. For participating preferred shares, the formula is number of preferred shares in unit divided by total stock and multiplied by amount available. So, 25,000 units divided by 225,000 units and multiplied by 75,000 ringgit, and you will get amount of 8,333 ringgit 33 cents. For participating common stock, the formula is number of common stock in unit divided by total stock and multiplied by amount available. So 200,000 units divided by 225,000 units and multiply by 75,000 ringgit, and you will get amount of 66,666.67 sen. Moving on to step 4, we will need to compute the total dividend. For total preferred shares dividend, the formula is ordinary preferred shares dividend plus participating preferred shares. So, key in the numbers, which is 125,000 ringgit plus 8,333 ringgit 33 sen equal to 133,000 ringgit 333 sen. For common stock dividend, the formula is ordinary common stock dividend plus participating common stock. So, key in the numbers, which is 400,000 ringgit plus 66,666.67 sen equal to 466,666.67 sen. For the last step, step 5, we will compute the dividend per share as the question wants. For dividend per share of preferred shares, the formula is total preferred shares dividend divided by number of stocks per preferred shares. So, the number will be 133,333 ringgit 33 sen divided by 25,000, and you will get the amount of dividend per share of 5 ringgit and 23 cents for preferred shares. For dividend per share of common stock, the formula is total common stock divided by number of stocks for common stock. So, the number will be 466,666 ringgit 67 sen divided by 200,000, and you will get the amount of dividend per share of 2 ringgit and 33 cents for common stock. We are now finished with the question B2.
Warahmatullahi wabarakatuh. My name is Nur Syazwani Syahirah binti Bahnuddin and I am from BA 1145D. Today I will explain about 2018 question C. This question asks to describe about the rights and claims of preferred stockholders. I will start with explaining about the rights of preferred stockholders. Firstly, preferred stockholders have no voting rights, so they have cannot vote for the board of directors of the company or vote for major proposals requiring stockholder approval. Hence, preferred stockholders are not considered as owners of the company as they have no voting rights. While having superior rights to dividends and assets over common stock, generally preferred stock does not carry voting rights. This is also a major reason why companies issue preferred stock, as it is a way to avoid a hostile takeover. A preference share is a crossover between bonds and common shares. Secondly, stockholders have preemptive rights. We need to know what is preemptive rights first. Preemptive rights give a shareholder the opportunity to buy additional shares in any future issue of a company's common stock before the shares are made available to the general public. Therefore, in the case of preferred stockholders, they are able to buy additional shares of a company's common stock, and they will receive a subscription warrant entitling them to buy a number of shares of a new issue. A preemptive right is essentially a right of first refusal. The shareholders may exercise the option to buy the additional shares, but it is under no obligation to do so. The preemptive rights give the investor the option to convert the preferred shares to common shares after the company goes public. This rights also allows a shareholder to convert preferred shares to new shares at the lower sales price of the new issue. If the company's new shares are priced lower, the shareholder is effectively compensated with a greater number of shares in order to maintain the same level of ownership. Thirdly, convertibility rights. Preferred stock holders are able to receive the convertibility features. This means it allows the preferred stock to be converted into a certain number of common shares. The preferred stockholders have a right to wait for a period of time before the conversion is available. As I have explained for the preemptive rights above, preemptive rights are often granted in connection with convertible preferred shares. enabling preferred shareholders to maintain their future ownership percentages when exercising options to convert their preferred shares to common shares. Lastly, dividend rights. This is the most obvious advantages to hold a preferred stock, as the preferred stockholders have a right to claim dividend every year when the board of directors declares a dividend. As my friend has calculated the calculation for March 2017, we can clearly see that the amount of annual dividend paid to the preferred stockholders is higher than the amount paid for common stockholders. This is because preferred shares dividend are paid to shareholders before common stock dividends are paid out. Also, dividend rate for preferred stockholders is always higher than interest rate of the bonds because preferred stock comes more risk compared to bonds. Common stock shareholders will not receive dividends until it is paid out to preferred shareholders. Moving on to the claims of preferred stockholders. Firstly, claim to income. Preferred stockholders can claim the income before common stockholders when the company is in financial trouble. This means if the company is facing bankruptcy before any shareholders, preferred shareholders will be given priority in the claim of income. Secondly, claim to company's asset and earnings. As preferred stockholders are first in line for the company's asset, this means that when the company is liquidated and will need to pay all the creditors and bondholders, preferred stockholders will receive the money first. Preferred stockholders have a prior claim on a company's assets if it is liquidated, although they remain subordinate to bondholders. Thirdly, claim on liquidation proceeds of a stock corporation equal to its par or liquidation value. This means when a business closes and sells all of its merchandise because it's bankrupt and gain proceeds from selling the merchandise, preferred stockholders can claim liquidation proceeds. This claim is similar to common stock, which has only a residual claim. We are now finished with June 2018 question C. Thank you for your attention, and we hope that this presentation will make you understand a little bit more about preferred stock.